Hello everyone, and welcome to CT Talks with Premier Brains. We are back again with another informative Q&A session on UAE corporate tax. The topic of discussion for today is transfer pricing. So recently, the Federal Tax Authority did release the Transfer Pricing Corporate Tax Guide. Now this guide, it helps in providing guidance on the basic rules of transfer pricing, the transactions that are related to connected persons and related parties, whether if such transactions are carried out on an arm's length basis, and the other compliance requirements regarding the transfer pricing, like the documentation. So with that said, let's get started with my first question to you. What are the transfer pricing rules relating to UAE corporate tax?
See, basically the transfer pricing refers to pricing of the transactions between related parties or connected persons to ensure that the transactions are carried out on an arm's length basis as if the transactions are between independent parties in order to prevent the manipulation of the taxable income. So UAE CT law also further provides that the consideration for such transactions between related parties or connected person should be based on the arm's length principle, which should basically reflect the market value of such transactions. The transfer pricing rules under the UAE law not only applies to transactions between multinational enterprise groups, but also between related parties and connected persons of the domestic groups. So there are few jurisdictions where the transfer pricing rule are only relevant to the cross-border transactions, but here in UAE, transfer pricing applies to both the cross-border as well as domestic transactions between related parties or connected persons.
So what is the criteria for determining the association between the related parties or connected persons?
So corporate tax law mentions that the related party transactions need to be associated with a specific degree of association. So this association can be by way of kinship or affiliation in the case of individuals, ownership or control, regardless of the fact whether the person is a UAE resident or not. So let us first talk about kinship or affiliation. Kinship basically refers to a relationship between individuals who are related up to the fourth degree of kinship or affiliation, which can even be by way of adoption or guardianship. So kinship means actually the blood ties of the individual, like the ancestors of the individual, or affiliation refers to basically any kind of relationship which can be by way of marriage or even the kinship of the spouse of the natural person would also get covered. So when we say the fourth degree of kinship, what do we exactly mean by that? So first degree basically means your parents and your children. When we go to the second degree of kinship, it means your grandparents, your grandchildren, your siblings. Then when we say third degree of kinship, it means your great-grandparents, your great-grandchildren, your uncles, your aunts, nieces, nephews. And then when we say the fourth degree of kinship, it means great-great-grandparents, great-great-grandchildren, your grand-uncles, grand-aunts, grand-nieces, grand-nephews, and your first cousins. Okay. So this was about, kinship. Now let's look at the second degree of association, which is ownership. Okay. So what is meant by ownership under the UAE transfer pricing law? So individuals who either alone or together with their related parties, directly or indirectly, are the shareholders in a juridical person and own 50% or more of the ownership interest in that juridical person. So that would imply a related parties association. So 50% or more of the ownership interest. The third category of association can be by way of control. So like it's kinship in case of individuals, then we look at ownership, which I just explained, and the third category is control. So what is meant by control is any kind of direction and influence which one person has towards the other person. So persons can be related parties when there is direct or indirect control over the other person. So then further, the control has been defined. How do you say whether someone has control over the other person or not? So the criterias are if someone has 50% or more of the voting rights of the other person, or they have the power to determine more than 50% of the board composition. They are entitled to earnings of 50% or more of the profits of the other person. And last but not least is like having a significant influence over the affairs and the business conduct of the other person. So all these criterias need to be looked at when you are identifying related parties, like by way of kinship, ownership, or control.
So who are the connected persons?
Okay. So the law says that any payments or the benefits which are being provided to the connected persons by a taxable person must be based on an arm's length price, and only then it would be deductible for corporate tax purposes. So connected persons have been defined in the law. So connected person of a taxable person include first the owners of the taxable person, which we just discussed, how the ownership interest is determined. Or if there are any related parties of that owner, those would also be considered as connected person. The second category is the directors of the taxable person or related parties of such director. Third category is the key officers of the taxable person or related parties of such key officer. And the last category is the partner in an unincorporated partnership or related parties of such partner. So this is basically the definition of connected persons under the UAE law.
What are the documentation requirements relating to transfer pricing?
So corporate tax law under Article 55 mentions the transfer pricing documentation obligation of the taxable person for reporting transactions between the related parties or connected persons. So transfer pricing documentation need to be maintained for all the transactions between related parties or connected person, and certain businesses will be required to further provide a more extensive transfer pricing documentation, such as the local file or the master file, etc. So we are going to discuss what are these. There are key 5 transfer pricing documentations which are mentioned in the corporate tax law. The first one is a transfer pricing disclosure form, where you basically report the controlled transactions between the related parties. The second is a master file, which is an overview of your multinational group's business activity, economic activity, and transfer pricing policies which you apply to each jurisdiction. Then the third category is a local file, which is a much more detailed report than the master file, which actually supplements the master file and includes details of the transactions for a particular local jurisdiction, and also mentions details on the transfer pricing policies which you have applied for specific transactions during that taxable period. So keeping a master file or local file is required for companies which are a part of multinational groups which have global consolidated turnover of 3.15 billion dirhams or more, or taxable persons which have revenue during the particular taxable period of more than 200 million dirhams. So in either of these cases, the businesses will be required to maintain local file and master files, and then to submit to the tax authorities upon their request. And the fourth category is a country by country report, which is to be submitted by UAE headquartered multinational groups which have global consolidated turnover of 3.15 billion dirhams. And this is, with regards to the cabinet decision number 44 of 2020. And then the fifth category could be any other additional information which the tax authorities may request as per Article 55 of the corporate tax law.
With regards to transfer pricing documentation, can you please elaborate on the information required in a master file?
Master file is required to be prepared for a taxable period depending on the specific facts and circumstances and the business conducted by the global business conducted by the multinational group during that taxable period. So master file requirements include, first of all, the organizational structure of the group, which includes basically the legal and the ownership structure of the group. And also it includes the information related to the group's business activities, that is the key drivers of the business profits during the year, the description of the main geographic location of the entity's business during that year, the description of the supply chain of the business, which would include a description of the 5 key products or services during that particular period, which constitutes more than 5% of the turnover of the group, so description of that business. Then a brief functional analysis of the principal contribution to value creation by the individual entities in the group. Then it would include information related to intangibles, information related to the intercompany agreements between members of the M&E group. And further, talking about intangibles, there has to be further details on the intangibles. So you would include the overall strategy of the group related to the development and exploitation of the ownership of the intangibles, the list on the group of intangibles which the multinational group owns, and also the intercompany agreements between the associated enterprises related to those intangibles, the specific transfer pricing policies related to those intangibles, any transfer of interest in the intangibles which took place during that particular period. And even on the overall group's business also, if there is any restructuring which has happened, any acquisitions which have happened, any divestitures which have happened, so the details of those restructuring transactions need to be included in the master file. Then the details about the financial arrangements of the group needs to be mentioned. So how the group is financed, is there any particular entity in the group which is providing the central financing function for the group, what are the specific transfer pricing policies related to those financial transactions, what are the intercompany agreements related to the financial transactions between the associated enterprises. Then you have to give information, financial information about the group and the tax position of the group. So the annual consolidated financial statements of the group, and also any advance pricing agreements of the group. The list of the advance pricing agreements of the group needs to be included in the master file.
Can you please elaborate on the information required in a local file?
So local file supports the master file to ensure and to report that the transactions are carried out on an arm's length basis and reflecting the transfer pricing position of that specific jurisdiction. So local file would include information such as the description and details about the local entity, which would include the management structure of the local entity, the organizational chart, the individuals to which the local management reports, and the countries in which such individuals have their principal offices, the details about the key competition of the local entity, the details about the business strategies adopted by the local entity during that particular tax period. The second category of information is about the details of the each category of the controlled transaction which the entity has entered into that particular tax period. So what those details would include is, first of all, the description and the nature of the category of the controlled transaction, the list of the associated enterprises who have been involved in those controlled transactions and how those associated enterprises have been identified, the comparability and functional analysis for each category of such transactions which has been entered by the local entity, then the list of the intercompany agreements entered by the local entity during the taxable period, then details about the transfer pricing methodology which has been applied to arrive at the arm's length basis, and the reasons for selecting that particular transfer pricing methodology also needs to be mentioned in the local file. Then further details about any comparability adjustments which you would have done. What are the reasons for selecting the multi-year analysis if you have done that way, a multi-year analysis that needs to be included in the local file. Then details about any unilateral or bilateral advance pricing agreements need to be mentioned in the local file. Then further details about the financial data which you have used while adopting a particular transfer pricing methodology, what kind of financial data you have used for the transfer pricing methods and how you have arrived at those financial data needs to be explained in the local file. Then, of course, the financial information related to the local entity, which will include the annual financial statements of the local entity or audited financial statements if those are available or those are required to be maintained. Then further details about the financial data and the allocation which has been used in the transfer pricing methodology and how they link to the annual financial statements of the entity. And then further details about basically the financial information which any schedules, any further details of the financial information, any relevant schedules of the financial information which has been used also needs to be included in the local file.
So that brings us to our end, to our first segment of today's episode. I'd like to thank Ms. Bhavna for her elaborative understanding and guidance on making us understand the basic rules and the documentation requirements for transfer pricing. So stay tuned for our next segment where we'll dive more deep into the transfer pricing guidelines and its applications in UAE. Till then, thank you and have a nice day.
Thank you so much, everyone.